Good morning, traders and investors. Roger Scott here. It's Tuesday. It's August 22nd, and it's about 7:51 in the morning. The market's not going to gear up to open for another hour and 39 minutes to be as specific as I can with you. Now, pre-open, as you can see right here, the S&P's up about 22 points. The Dow's up 85. This is pretty random. Now, here's the interesting part about the Nasdaq. And Nasdaq got a little tailwind yesterday from some tech stocks getting into some positive territory. And also earnings were positive for a few, and I'll talk about that in a minute. But as you can see here, the Nasdaq, the near-term contract, the one that has the near term, it's not doing all that great right now. Let's see how QQQ is doing pre-open. Let's just take a quick look here. It is down. It is up a little bit, 0.69. So there is some buying coming into that, but be very cautious. I hardly ever see anything like that. You see usually the further term out, but not the near term. So this is a little bit of a red flag right now, unless this is a misquote. And again, it has some liquidity, so I don't really know what to think of it. But again, keep an eye on this. This is a little squirrely. As far as Fed data, you've got existing home sales today, and you've got manufacturing. And another factor we have to keep our eye on outside of home builders this week, especially outside of home builders, is the retail sector, which is reporting a lot. Like, for example, home builders and retail. Those are the two, and we'll get into all of it in a minute. But here's the big stuff. Toll Brothers, BJ, Dick's, which I think already reported, Lowe's, Urban Outfitters, Macy's. It's not the fact that these are big market cap stores. It's the fact that retail has a big impact on the economy, especially GDP, because 2/3 of GDP is retail sales. Folks, before I get too deep into this video, make sure to like this channel, subscribe to our Telegram channel, subscribe to our YouTube channel, and most importantly, don't miss my VIP room. I go live at noon today. Today's Tuesday. I go live at noon. Don't miss out. I'm going to give you 3 breakout stocks, some continuation stocks. We're going to talk about home builders, and I'll give you an update of everything we're talking about here. So the main theme this week is retail and home builders. Those are the 2 factors we're looking at. Now, keep an eye on the bond market. As I mentioned yesterday, the bond market was down. We didn't see any upside. The reason we're seeing upside in technology is because earnings are coming out slightly better than expected on a handful of stocks, but that doesn't mean that's going to continue. And it's also very, very fragmented. Now, as you could see here on the bond market, we're almost near our target, but this is going to put a lot of pressure on the stock market, and it already has. And if you look at the QQQ, for example, I mean, it rallied hard yesterday, but here's the problem. We didn't rally from here. We rallied from all the way up here. So I'm very, very cautious that this rally is only going to come up to about the resistance level right here and bounce back down. I'm not confident in this rally. I don't see the market cap coming into the market. I'm not seeing anything exciting. Again, this seems to be a little too much. This has to, the catalyst right now has to be very, very strong for this to continue. The problem is most S&P 500 earnings are behind us already. There's nothing there. So we got to be very, very cautious. And again, I feel like we may be coming up to here, trapping a bunch of buyers and then making another leg down. Because as you'll see here, we've been going up very, 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 very strong for a very long time. And if you look at momentum levels, if you look at the S&P, the 50-day moving average, I'll show you the 50 and the 200. Look at where we're at. And look at where we usually end up going. So I don't see this as being a bottom just yet. It could be, but I don't think we're just there yet. Now look at the 200-day. The 200-day right now is up here. That means 50% of stocks are trading at the 200-day moving average, which means we're officially still in a bear market. Here you've got 80 above. Here we're at 50. I think this is going to go to about 30, maybe even lower. I don't think this is. I don't think we're done. And the fact again is, earnings are pretty much behind us. There's no major catalysts. So I think the market is trying to trick us right now, and is actually going to go a little bit higher and then lower instead of higher. Now, looking at retail, does this look like an ascending line? It's already down this morning. It's down here. Dick's is, look at Dick's. It's down this morning. I'm going to talk about it when I talk about my day trading stocks. It's down already 18%. things are just not looking all that amazing. And I don't think Macy's is going to come out with good data. I mean, look at the stock, for the love of God. I mean, this thing, look at this. And Urban Outfitters, what's the ticker symbol for Urban? URBN. Let's take a look. URBN. Yeah, just not seeing a lot of, I mean, this one is doing good, although it is at long-term resistance level right here. But it is looking better. The problem is it's already coming off. Just like I told you about the Russell. Remember, the Russell came up there on a weekly basis and started coming off. Just like the Dow, we're seeing the same thing. This is a weekly chart to give you a perspective of where we're at right now. So I'm not seeing a lot of bulls right now. Sorry to be such a bear, just not seeing it at all. And I'm not a bearish guy. I'm not a bearish trader. I'm not one of those doom and gloom kind of guys. I'm just not seeing a major rally. Tomorrow you've got new home sales, existing home sales. Now this report could trigger a rally, but again, home builders, they don't have as much market cap as retail and tech. Then you've got durable goods, jobless claims, which is not going to be a nothing burger, which is going to be a nothing burger, not going to be not a nothing burger. Now, sorry about the double negative there. And then Jerome Squirrelly Powell speaks on Friday, which will be very, very, very interesting. As I mentioned again, momentum levels are on the downside. They don't look all that great right now. They look like they're coming down. And this is the 200-day line. So be really, really cautious. Let's talk a little bit about global economy, and then I'll get into individual sector strength, and then I'll give you top, bottom stock, and some day trading stocks. But you gotta subscribe to my Telegram channel, rogerscott.com/Telegram, and you gotta go to my, join our YouTube channel. We're gonna be changing the name on the YouTube channel, by the way, so just don't get confused. It hasn't happened yet. 3 major U.S. benchmark indices ended the regular session mixed as investors braced for earnings report from retailers ahead of Friday's speech from you-know-who. Tech-heavy Nasdaq outperformed the major benchmark. NVIDIA made a big move. That's what caused it. It got upgraded. Tesla made a big move. By the way, Tesla is down quite a bit this morning, just FYI. And I think it's down. It might be up a lot. One or the other. We'll see. And PanW surged 14%. That's really, really good. That's what's really caused the rally yesterday. A bunch of good tech news. But for this, the market would have sagged. Johnson & Johnson fell. Banks got downgraded. Keys and CMA, not very good. Everybody's waiting for the Jackson Hole Symposium, where Squirrelly's going to talk about central bank's future monetary policy meeting, where I believe the increase in September is going, I think they're going to, not September, November. I think they're going to raise rates in November by a good 0.50, or at least 2 more times before the end of the year. I think this is just a waiting game. We're now pricing in a 15% probability of a 0.25 basis point rate hike. That's the highest we have seen, by the way, since the last call. And now we're having a 39% chance of a 0.25 basis point rate hike in November. So economy is weakening. The fact that these numbers are strengthening is bad for the stock market. The more these numbers increase, the worse the bond market gets, because this means higher interest rates means lower bonds. On the earnings front, what do we not have today? You've got Lowe's, you've got Dick's, you've got Baidu. I didn't even know about Baidu. You got Medtronic, you got Toll Brothers. They're all reporting. You got U.S. existing home sales. You got the manufacturing index. And then you got a bunch of Fed speakers talking today, which is good. They're all going to say we're in a wait-and-see mode. That's all they're going to say. They're going to say things are not moving as fast as we like. We're seeing great improvement, but it's not happening as fast. You got to understand some of this information is lagging, so therefore we have to wait and see, and we'll decide what we'll do in the very near term. That's what I believe where we're at right now. And again, giant technology stocks are leading the overall market higher, but it's only been happening for a few days. And that's the problem. It's only been happening for a few days. In Europe, that's Europe I was just talking about. They're driven by positive sentiment. Europe has been just keying off of U.S. shamelessly lately. China, index staged a sudden rally on Tuesday. Technology stocks, several traders said it was due to technical factors. All I know is China's real estate is just sinking. It's like a sinking ship. Japan closed higher, driven by advancement in banking and chip-related stocks. Bank stocks outperformed on Tuesday as higher long-term yield improved the profit outlook of lending. All right, well, yeah, higher interest rates are good for banks. Now, you've got Zoom. You've got NVIDIA coming out with an upgrade. You've got Zoom coming out with good earnings. And again, you've got a lot of earnings today right here and Cody's also coming out with earnings. BJ's is coming out with earnings. These are important things to look at. Now, as far as sectors, I wanted to show you the cumulative. Home builders are still in a second spot. Real estate and home builders on a cumulative basis, that was the worst spot. On a cumulative basis, real estate home builders are in the weakest spot, followed by Russell 2000, consumer discretionary, utilities, mid-caps, and retail. So on a cumulative basis, the retail sector, the home builders sector is doing awful. Technology, not good. Here's where the strength is. Energy, healthcare, blue chips, the Dow, financial, S&P 500. And then we start going into the industrial, material, technology. So it looks like all the growth sectors, all the deflationary sectors are on the downside. Let's look at it on a 3-week basis. Energy, healthcare, blue chips, industrial, financial, S&P consumer staples. I like this. I like the 3-week. I really do. But look at what's at the bottom. Russell 2000, small caps. Home builders. Today, home builders, hello. Real estate, home builders, real estate. Utilities, because bond yields have been going up. Technology, material, mid-cap, consumer discretionary, QQQ, retail. Retail and home builders are at the bottom, not at the top. And I'm not expecting anything amazing from the earnings today. Don't hold your breath. If you think retail earnings are going to be great, So look at the top. Energy, healthcare, blue chips. There's not a lot of tech here. Industrial, financial, S&P 500, even consumer staples is starting to come up. So this is where my focus would be right now. So let's look at top stocks. I'll give you guys my top stock, my bottom stock, and then we'll move on to day trading stocks, right? And again, if you guys are enjoying this, go to my midweek roundtable. It's happening today at noon. It's actually not even midweek. It's Tuesday at noon. There's a link above or below this video, and I'll give you 8 or 9 live trades today. So let's look at the charts. Let's put this by strength. Yeah, NVIDIA, I would not be putting my money in NVIDIA right now at all. EQT is looking really good. I've been talking about and telling people to buy this stock all year. This is a great stock right now, EQT. Great stock right now. CEG, Constellation. ETN, this stock right here. So if I was a betting man, here's where I would put my money. EQT, CEG, ETN, and Marathon Petroleum. And there was another petroleum stock. I think it was Murphy Oil that also looked good yesterday. And power as well. Power, Marathon, ETN, CEG, and EQT. Where would I not put my money right now? Well, glad you asked. Let me show you where I would not put my money. I would not put my money right now. DXC Technology. I think this thing is going to come right back down. Moderna. I think Moderna is going to come right back down. And Albemarle. So those 3 companies I would sell. Now, let's look at the weakest tech stocks right now. Because if tech goes down, ooh, baby. Look at this. PayPal, you don't want to be long PayPal right now. You don't want to be long Moderna right now. And you don't want to be long ANSS right now. Those are at least not making bottoms. I wanted to give you something that's not making a full bottom. But these stocks are weak right now. Now, what's our day trading stocks for today? All right, let me show you what I'm looking at right now. I'm looking at the stock right here. It's called PMN. Let me just go right here. Click extended trading hours. Go to 1 day, 5 days. So you could see right here, the stock rallied over the last 5 days. It's at $2 right now. It's up about 28%. I think the stock is going to come right back down. I think the stock, as soon as it breaks the $1.99 level, maybe $1.98, I think it's going to come down to $1.60. That's the first thing. The second thing is Tesla. Let's look at Tesla real quick. Look at Tesla. It's rallying up there. The problem is it's in a downtrend. It's in a downtrend on a weekly basis. It's on a downtrend on a daily basis. And it's in a downtrend on a short-term basis. I think Tesla's going to rally and then come right back down here. So I would wait for the end of the day, and I would wait to see if it rallies up. I would wait, but as soon as it starts falling down below this level right here, 237.50, I would sell it, and I would cover it right here, 212. I think it's got 30 points to go to the downside. I do, but don't chase it. Wait for it to come below 238. Next one is FULC. Now this little baby here, look at this. It's up 47%, and I don't think it's a runner. I'd like to sell this stock below 490. If this thing goes to 490, it's going to drop a buck. Downside, to the downside. You want to fade these. And to the upside, Dix already came out with earnings. What do you know? Now, we don't know what Dix is going to do, but Dix is down, but look at what it's doing. It's already making a reversal. I want to buy Dix above 130.40. Don't know if it's going to get there, but if it does, it's going to start filling in this gap, and it's going to look like a very, very nice pattern. So Dix above 130.57. Folks, remember, like our YouTube channel, subscribe, post comments and feedback, and I'll see you in my VIP room. But before I let you go, an expert trader believes one asset is about to cross the $30,000 threshold permanently. And I'm sitting down with him at 1 p.m. Eastern tomorrow, Wednesday, to discuss this explosive asset and how everyone can trade it. It's going to be a great time. Consider this a formal invitation to join us. I'm even going to throw in a free gift for everyone in attendance. Yay! Consider this your formal invitation. So click the link below, follow the link, reserve your spot, 1 p.m. Eastern Time, Wednesday, tomorrow. I'll see you there. Comment below this video, like our channel, subscribe to our channel, and I'll see you in my VIP room. Bye. Have a great day and good luck with today's day trading stocks.